I'm looking at your price target. You're a bit below the street. Your price target 132. Everybody else is at 146. What are you not seeing in the stock that the rest of your peers are seeing? Are you worried about pricing? Are you worried about demand? What are you looking for?
Great question, Frank. Well, I think we learned last quarter that the company moved to take on a lot of volumes. Companies like Temu and Shein, they were getting these lightweight, low revenue volumes onto their network. That really jammed their network, and that's why you're looking at margins. You just had a slide up, showed you mid-single-digit margins on the domestic side. That's going to be the lowest point of the year, and that's pretty thin when you think about what this company used to do in the mid-teens. And so getting 5% margins really highlights you're trying to take a lot of network. There's not a lot of value in those packages, and so pricing, as you just mentioned, is really key. We're looking for volumes to be up. Pricing to be up. This will be up, also a volume up quarter. It'll be the first time in 7 quarters. But it's taking on this lightweight volume to fill up the network while the market remains in pretty flat mode.
So, Ken, explain this one to me. You and a lot of other analysts are very concerned about pricing and demand, but at the same time, UPS is actually raising its prices by about 6% coming up in December. FedEx is doing the same thing in January. If there's issues with demand, how are they raising prices?
Well, I think they're looking at the volumes that they're taking on. So you've got stuff that's moving on the network, but you're not getting appropriate returns for the investments you have to make. And so they're saying if you want the quality of a UPS network, you've got to pay for it. It's very different, right? Then obviously you've got competition from Amazon, from the post office, but there's value in what UPS and FedEx provide. But they were willing in a very low demand environment just to take on any volume they could. And I think we saw last quarter a very large surprise on the negative margin. Not margins were negative, but well below expectation, right. And that hurt the stock.
All right, margins under pressure, fair to say. I got to ask you about the election. Normally, we'd ask you about the freight recession, but I got to ask you about the election, the possible impact on the logistics industry and stocks like UPS. Your peers over at Wells Fargo, they put out some stocks that would be impacted by a Trump or a Harris win. UPS, one of the names they put up that would be impacted negatively by a Trump win. Agree with that take? Do you see an election impact on logistics and specifically the parcel business?
Well, when you just throw out the election overall, I mean, you've got to kind of choose, obviously, different policies that you want to talk about. Are we going to talk about tariffs that are coming in, lower or higher tax rates? So it depends on where the question comes from. Obviously, if we have tariffs, things that are coming from Asia are going to slow down if we're increasing pricing. Things like Temu, Shein, or just regular packages from Asia, that would slow. Okay. And therefore, you would have, if you're moving to domestic production, then you're going to have the potential of moving raw materials domestically and the finished goods, so you can touch the good twice. Right. But again, those supply chains take a while to get up and running. So certainly there are going to be initial impacts and then winners over the longer